Hello, this is Erin Swenlin with your Daily Five. These are the five charts that I have been watching closely, and I think that you should be watching closely as well. All right, so let's start off with the SPY 5-month candlestick. And I've been watching this one very closely. I've opened up just about every decision point alert with this chart. And the main thing I like to look at this chart for, there's quite a bit here. But right now, I've been watching this rising wedge. Now, granted, at the time that I am recording this, the market is up about 2%, but we still aren't really back into that rising wedge. We haven't been able to get back there and up into there. I thought that we could see that 20-day EMA hold up, but I also was seeing a few things under the surface that I didn't like with some of our indicators, but I'll get into that a little bit later. All right, so right now we can see that the PMO is beginning to rise. The PMO is very similar to the PPO. It is an indicator that we developed at Decision Point that we like. And right now you can see it is starting to get above that zero line. So that is positive. And you know, yesterday when I was looking at it, it hadn't quite reached the zero line, and it was, you can see in that thumbnail, starting to decelerate. So I was pleasantly surprised when I saw the market open higher as it has, holding that 20-day EMA. But it was a little bit surprising to me because there were a lot of bearish characteristics on a lot of our indicators and charts. You can see right now, looking at that VIX, I invert my VIX into a log scale because I like to see overbought and oversold territory. And in my opinion, the higher the reading on the VIX, the more oversold we are. If the fear factor is very, very high, it acts like sentiment. And when bearish sentiment is high, that's when you want to start looking for a reversal to the upside. So we're looking at oversold readings back here that got out of hand. This is the new methodology calculation. But as you can see, we hit this average and now we are starting to come back up. These are some really interesting bullish signs that I'm getting from that indicator and a few others that I'm looking forward to seeing after the close when they go final. Swenlin trading oscillators. These are our short-term indicators, and honestly, they have been really right on it. They have been nailing the tops and bottoms in the very short term, and I've been very proud of them. I have to say, though, however, yesterday they were still continuing lower. This is from the 21st of April, so you can see what's going on this chart. And I was looking at these accelerated declines as a problem. And, you know, it still could end up being a problem. We have some interesting support levels still that we can go back down and test. I'll be, like I said, watching these indicators very closely. But what I wanted to note is, you know, while I was surprised to see a strong open today, the Swenlin trading oscillators are starting to move into typical oversold territory. So I was going to start looking for that turn sooner rather than later. But at this point, of course, they are still in decline, but they are now in oversold territory, at least what used to be considered oversold when we were in a nice bear or bull market. One of the things I also noticed was that the percent of PMOs rising, that's our price momentum oscillator, as long as they're rising, they end up in here in this percentage, and 73% currently have PMOs rising. You can see how we were decompressing. But what I wanted to point out was back here, we held a 100% reading of percent PMOs rising. 100% of the S&P 500 showed rising PMOs. And I actually went back in history to check that out because I'd never come across that. And sure enough, I went back and I went back quite a few years, and I never was able to find a reading of 100%. So when we got that reading of 100%, we got tops on the Swenlin trading oscillators. It was time to start looking for a pullback or a decline. And if you look in the thumbnail, it's still, we did get that that push upward, that gap upward, turned into somewhat of an island here, got that drop, and now we are trying to come up and close that gap. The indicators aren't really supporting much past maybe closing that gap. All right, I've got to look at the oil chart. I mean, at this point with oil crashing the way it is, how could I do the daily 5 without looking at an oil chart? And what I found last night when I was writing my decision point alert was that since WTIC has been charted, which is the early 80s, is when we were able to get the data for WTIC, and actually yesterday for the first time we set a new all-time low. So we didn't just crash through some support areas that we've been watching, but we crashed through the all-time lows on WTIC. And currently, as of we lost 43.5% yesterday because this is a contract, so we're looking at Tuesday's numbers. But if you go look at an oil chart right now, you can see that oil is still making new lows at this point if you look at USO. And so I'm not looking, this isn't a time to bottom fish. I don't think with oil. We have hit some obviously amazing support levels here, the all-time lows. But you can see that even today we were losing more in the way of price on USO. And I suspect when we close out the day and close out this WTIC contract that we will still be at lows. We are not seeing anybody else bottom fishing here. I think this is going to be a great area to invest in and look for a rebound, but it is not here yet. We need to see demand start to move up. Supply is out of hand, and so we will need some help there. All right, let's look at gold miners. Gold miners is one that I track in the decision point alert daily as well. And what I have on here, I want to explain the indicators quickly. The BPI, many of you are familiar with, but we have a silver cross index and a golden cross index. And these measure the golden cross. I think that's one that you might be familiar with. 50 to 100-day EMA crossovers to the upside is a golden cross. So we're measuring that percentage of the gold miners that have their 50-day EMAs above their 200. The silver cross is similar, but it's the 20 and 50-day EMAs that we pay attention to. So we are seeing some great movement here on these indicators. I pointed out yesterday, and you can see it even better in the thumbnail, we have this breakaway gap. We're making a flagpole, a nice long flagpole, I might add, and you have the flag formation on the end. I like to see that flagpole be this tall because when you get a breakout from these flag patterns, you should expect to move about the size of that flagpole. Well, I'm not going to sign up to say that's where we're going here, but the breakout today is following through on what we were looking at yesterday. And then finally, I wanted to finish just with one stock that I was watching. I wrote about this in my Decision Point Diamonds report, and I do recommend you go check that out, where I write about 5 stocks 3 days a week. And DXCM I had pointed out yesterday because we were seeing that pullback, and it had pulled back to some very interesting support. When we get these big down days in the bear market, it's time to start looking for some bargains or ones to add to your watch list. Costco is one, and it was up, but DXCM I like as well. We got that pullback, RSI rising. You've got the on-balance volume rising to confirm that move. And then back here, we did have a pretty solid bull flag, and the length of that flagpole is about 100. So you add that to that breakout point, that gives you an upside target of about 380. So nice looking move there. All right, that's it for the daily 5. I hope you enjoyed looking at my 5 charts. Happy trading.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.